Hello and thank you for joining today's webinar, New to Self-Assessment, Records, Budgeting and Payments. Before we start today's webinar, I'll just mention that this webinar is part of a series that will help you with your self-assessment tax return. These are the titles of the other webinars in the series. You can find out when these webinars are running and about other products to help you with your tax return on our HMRC email updates, videos and webinars for self-assessment page on gov.uk. During today's webinar, we'll be looking at record keeping, amending your tax return, budgeting for your self-assessment tax bill, how to pay your self-assessment tax bill, the HMRC app, business and personal tax accounts, signing into HMRC online services, and hints and tips. Here's a quick reminder about what we mean by self-assessment. Self-assessment is a system HM Revenue and Customs, or HMRC, uses to collect income tax. For many people, tax is usually deducted automatically from their wages and pensions under pay-as-you-earn, or PAYE. People and businesses that have other income, however, may need to report it in a tax return. For the remainder of the webinar, we shall be referring to self-assessment as SA. In our webinar New to Self-Assessment and Introduction, we briefly mentioned record keeping is an important part of self-assessment. So let's look in more detail at the records you need to keep to be able to complete your tax return correctly. I'll start by mentioning Making Tax Digital, or MTD for income tax. From 6th of April 2026, there's a legal requirement to use MTD for income tax for anyone that had self-employment and or property income above £50,000 in the tax year 2024 to 2025. You should have signed up for MTD for income tax and be using compatible software to record your income and expenses for the current tax year 2026 to 2027. However, the principles of working out your income and expenses remain the same. The £50,000 threshold is being reduced over the next 2 years to £30,000 and then £20,000. You must sign up to MTD for income tax before the start of the tax year in which you're required to start using it. You can find out more about MTD for income tax on gov.uk in our webinars and our videos on YouTube. If you're not required to use MTD for income tax, how you keep your records is up to you. They can be kept on paper, digitally, for example a spreadsheet, or on bookkeeping software. If you send us your tax return on or before the deadline, you must keep your records for at least 22 months after the end of the tax year that the tax return is for. If, however, you send us your tax return after the deadline, you should keep your records for at least 15 months after you sent the tax return. If you're self-employed, you'll need to keep your records for 5 years following the deadline for filing your tax return. For employees and directors, you need to keep documents about your pay and tax, including your P45 if you left your job during the tax year. This will provide pay and tax details to the date of leaving. Your P60 if you are still employed on the 5th of April. This provides pay and tax details for the tax year. Form P11D, which provides details of any expenses and benefits, such as a company car or medical insurance, information about any redundancy or termination payments you've received, tips received, and any lump sums not included on your P60 or P45. If you're self-employed, you'll need to keep records of all sales and income, all business expenses, VAT records if you're registered for VAT, PAYE records if you employ people, and records about your personal income. For savings and investments, you should keep, for example, bank and building society statements and passbooks, statements of interest and income from your savings and investments, bank tax deduction certificates and UK dividend vouchers, chargeable event certificates showing profits made from life insurance policies, state pension details, and forms P60 from your pension provider. If you're in receipt of rental income, you should keep details of the dates when you let out your property, rent received, any income from services you give to tenants, for example, if you charge for maintenance or repairs, rent books, receipts, invoices and bank statements, and also allowable expenses you pay to run your property, for example, services such as cleaning or gardening. If you receive overseas income or have any capital gains or losses, please go to gov.uk for information of records you should keep. We also have live and recorded webinars, as well as useful YouTube videos to help you with record keeping. You can find these on our help and support pages on gov.uk. We'll now look at amending your tax return after you've sent it. If you realise you've made a mistake or forgotten to include something after you've submitted your tax return, don't panic. You can correct a return within 12 months of the self-assessment deadline. You can amend your online return by following the step-by-step guide on gov.uk. Please note you need to wait 3 days after filing your tax return before you can amend it. If you originally sent us a paper return, simply send another paper return with amendment written on each page and include your name and unique taxpayer reference or UTR. If you miss the 12-month deadline, you'll need to write to us within 4 years following the end of the tax year to which the tax return relates. Just to remind you that any changes may affect the amount of tax you have to pay or the amount we have to refund. So please make sure you check your calculation. There's more information on gov.uk, including when to expect changes to your tax bill after making an amendment. Budgeting for your SA tax bill is a key part of self-assessment and will help you avoid any interest charges and late payment penalties. Firstly, the key date for paying any tax that you may have to pay is by midnight on the 31st of January in the current tax year. This date applies to both paper and online returns. For example, any tax you may owe for the tax year ending 5th of April 2026 will need to be paid by midnight on the 31st of January 2027. As well as your payment for the tax year, your tax calculation may also show something called a payment on account. Not everybody has to make payments on account. They are advance payments towards the tax bill for the following tax year. If you have to pay them, you make two payments on account, one by midnight on the 31st of January before the end of the current tax year, and another by midnight on the 31st of July after the current tax year has ended. For example, for the tax year ending 5th of April 2026, you'll pay any tax due by midnight on the 31st of January 2027. First payment on account by midnight on the 31st of January 2027, and your second payment on account by midnight on the 31st of July 2027. You can find more information about payments on account on gov.uk. So you can see why it's a good idea to budget for your tax bill. As we mentioned, doing this can help you pay what you owe on time and avoid any fines. You can file your tax return anytime from the 6th of April after the end of the tax year it's for. For example, if you're sending your tax return for the 2025 to 2026 tax year, you can submit your completed tax return anytime from the 6th of April 2026 onwards. By sending us your tax return early, we'll be able to tell you how much tax you owe. This allows you time to put some money aside towards your tax bill. You can also use our tool on gov.uk to estimate what your tax bill might be for the tax year. Enter all your estimated income to get an idea of how much income tax and, if due, Class 4 national insurance you'll need to pay. The tool assumes you get the standard personal allowance of £12,570. You should include all types of income when using it, but there are some scenarios the tool doesn't cover. Please read the guidance before starting. You don't have to wait until the 31st of January or the 31st of July to pay. If you do, you may miss the deadline. A budget payment plan allows you to make regular direct debit payments towards your next tax bill. To set up a payment plan, you must be up to date with any earlier self-assessment tax bills. You can choose how much you want to pay, how often, and even pause payments for up to 6 months if you want to. If you set up a budget payment plan, it's a good idea to include an end date. For example, 31st of January. If you don't, any repayment you're due may be delayed. These payments will show on your statement of account as a credit until payment is due, but not in your tax calculation. You'll also be able to see any balance due in the HMRC app. Remember, if there's anything left to pay, you need to pay it by the 31st of January. As well as using a budget payment plan, you can also make regular one-off payments through your online bank account by using faster payments, setting up single direct debits, or by sending a check. So how can you pay, and how long does it take to reach HMRC? You can pay your self-assessment tax bill through the HMRC app. More about this shortly. For your payment to reach us the same or next day, you can pay by approving your payment through your online bank account. Online or telephone banking using faster payments, CHAPS, or your debit or corporate credit card online. Please note you cannot use a personal credit card to make a payment. You can also use a paying in slip from HMRC at your bank or building society. For payment to reach us within 3 working days, pay by direct debit if you've set one up before with us. Otherwise, it's 5 working days. Or backs. Alternatively, you can send a cheque through the post, though this is less secure and may take longer. If the deadline falls on a weekend or bank holiday, your payment must reach us by the last working day unless paying by faster payments or debit or corporate credit card. You cannot pay at the post office. You can check HMRC have received your payment in your online account or through the HMRC app. Electronic or online payments sent in the last 7 days will show in the Your Balance section in your online account. Other payments will take longer to appear. Remember, we have other webinars in this series which go into more detail for you, including your self-assessment calculation and payments. We also have short videos available on HMRC's YouTube channel. HMRC understands that you may not be able to pay your tax bill on time. You must contact HMRC as soon as possible if you have missed a deadline or know you won't be able to pay on time. Don't just ignore it. You may be able to set up a payment plan online called a time to pay arrangement. This allows you to pay in installments, taking into consideration your personal circumstances. A time to pay arrangement will only be agreed if HMRC consider you will be able to keep up with the repayments. If you cannot set up a plan online, you should still contact us. Here's some information about our app and the business and personal tax accounts. If you haven't already downloaded the HMRC app onto a mobile device, there are several good reasons why you should do it straight away. These are some examples of what it can be used for. Check your tax code, national insurance number, and your UTR for self-assessment. Find your income and benefits such as child benefit and state pension. Check what self-assessment tax you owe and make a payment. Access your Help to Save account. Use our tax calculator to work out your take-home pay after tax and NI. Claim a tax refund and update your postal address and more. Your business tax account, or BTA, can be used by sole traders, partnerships and limited companies to get details of their tax positions. This could be for self-assessment, PAYE, VAT, corporation tax, and over 40 other business taxes. Individuals can use their personal tax account, or PTA, to check records and manage their details with HMRC. We've included some of the things you can do using your PTA on the slide for you. As you can see, the actions you can perform on both the PTA and the BTA are very similar to the HMRC app. You can find more information including how to set up your PTA on gov.uk. Let's look at signing into HMRC's online services and what you can do if you're having problems signing in. To sign into HMRC services, you now need to choose how to sign in by selecting Government Gateway or gov.uk One login. But which do you choose? If you already have a Government Gateway account for HMRC, you should continue to use this, even if you have gov.uk One login details for another government service. We'll tell you when you can move to gov.uk One login. This will be at different times for different people. So just choose Government Gateway. Then enter your Government Gateway 12-digit user ID and password as usual. If you were asked to create a gov.uk One login when you registered for HMRC services, or you've been asked to move to gov.uk One login for HMRC services, choose gov.uk One login. Then sign in with your email address and password. If you've never used HMRC online services before, select Create New Sign-in Details. The service will then guide you to create Government Gateway or gov.uk One login sign-in details. You'll need to do this even if you already have gov.uk One login sign-in details for another government service or an email subscription. If you've forgotten the Government Gateway user ID or password you used to sign in, you can recover or reset your signing details. Simply follow the links on the sign-in page. If you enter your Government Gateway user ID and password incorrectly too many times, you'll be locked out of your account. Your account will unlock automatically after 2 hours and can't be unlocked by help desk advisors. If you're having problems with gov.uk One login, please read the guidance available on gov.uk. If you still need help after checking the guidance, there are lots of ways to contact us. If you do need to contact us, you'll be asked for a reference code which helps us to see where you may be having a problem. You can ask HMRC's digital assistant for help with using HMRC online services. If the digital assistant can't help, you can ask to be transferred to a web chat with an HMRC advisor if they are available. Finally, here's a few tips you can take away with you. These are just a few suggestions to help you with self-assessment. Set up a good record-keeping system as soon as possible and keep it up to date. Maybe look at keeping records digitally by setting up a text or spreadsheet document. If you're self-employed, make sure you're claiming all your business expenses and keep track of them. Make sure you're claiming the correct tax reliefs. Make sure you have everything you need to complete your tax return before you start. Don't delay sending us your tax return, as this could lead to unnecessary interest and possible penalties. Don't wait until the deadline to send us your tax return. Start early, and if you can, file online. Filing online means you can track your progress, and you can even do it in stages by saving as you go. You'll also find out if you need to pay tax or are due a repayment sooner. Tailoring your return saves you time in the long run. Try to budget in advance. Finally, and more importantly, don't be afraid to ask for help. There are lots of ways HMRC can help you. Just search gov.uk for extra help and support from HMRC. Please take some time to explore the range of support we offer to help you get things right first time. I'll just remind you that these are our other webinars in the series to help you fill in your online tax return. You can find out when these webinars are running and about other products to help you with your tax return on our HMRC email updates, videos and webinars for self-assessment page on gov.uk. We are nearly at the end of the webinar now. Here's a summary of what we've covered today. In today's webinar, we've looked at record keeping, amending your tax return, budgeting for your self-assessment tax bill, how to pay your self-assessment tax bill, the HMRC app, business and personal tax accounts, signing into HMRC online services, and hints and tips. If you need more help, our full range of help and guidance can be viewed at any time. Thank you for listening and goodbye.